What's up, everybody? Welcome back to the Day Trading Show. Today's episode is all about risk management. James and I are inspired from a question from an ASFX member to dive deeper and kind of pull out some tactics on how to actually manage your trades to stay in the winners longer and get out of the losers sooner. So sit back, relax, and enjoy today's episode. What's up, everybody? Welcome back to another episode of the Day Trading Show. James, how you feeling, bro?
Feeling good as always, brother. How are you?
I'm good. You know I'm good today. Passed phase 1 today, so I'm feeling extra good today. Dude, and when it was, I filmed it. If you go on my Twitter, I filmed it and I put up this video. It like goes up over 16K. I didn't close it right away because I wanted to make sure I didn't like lag, like it was up 16 and then it, pulls back or whatever in the time of me clicking. So it was up 16. I didn't close it, went backward. I'm like, oh my God, are you kidding me? Came back down. It was funny, but I got it passed. So that's good. So definitely happy about that.
Well done. Big congrats. That was a good bounce back.
Thank you. So today, what we're talking about is risk management. That's going to be the focus of the conversation today. I know that the bigger focus might be the sunburn on my forehead, but I want us all to try to really dive in deep here. This topic is brought to us from a friend of mine, a guy who is a trader who I think he recently just moved to Mexico to trade from there, and it just aligned more with his lifestyle. He actually was at one of my seminars in Tampa, one of my most recent seminars earlier this year. So his name is Tyler, and Tyler basically, he sent me this long message on Discord. I want to read this to start, James, and then we'll piece this apart. But basically what he's saying is a lot of his winning trades end up going 3, 4, 5R, 5 to 1, right? Really, they move very nicely, but he ends up getting stopped out of them. So he says, I know you've touched on this, staying in the trade longer, but I was hoping you guys could dive deeper on it. He said, is it purely live trade management that we need to work on to improve staying in these trades and, our ability to stay in the trades, or is it as simple as locking your stop and profit and shutting up? So I wanted to dive deep on this. Maybe we could talk about the tactical side. Like I said, on the technical side, what are we doing with the stop? How are we doing that? But also the psychological side. And I think you bring a good perspective to this too, bro, because everybody knows you as the snag and bag king, in and out of your trades faster than lightning. But we've been both kind of pushing each other to hold some of these trades longer. So is there anything you want to start with to open up the conversation?
The first thing I want to say is that everybody's different. As you mentioned, I'm the snag and bag king. Everybody's going to have, some people are just, you get guys that are able to hold to 5R. They might not win a lot, but they might have their winning trades. They can hold most of the piece to 5 plus R, right?
Sure.
Right. Whereas I found that I win a lot. So my winning percentage over the years has always been, from when I became consistent in the middle of 2020, has been above 75%.
Right.
But my risk to reward ratio isn't over 2. It's about 1.43. So it's the trade-off. But I feel that just suits my personality. So you got to find what works for you in the back testing and in the forward testing and go back and look at your results.
Yeah, no, that's a great point. And I think that finding what works for you is sometimes difficult until you try a lot of different things. Like from my experience, I was the guy at first where I would take the trade. Number one, I would put the same position size on all my trades, which is not smart. We've learned, right? But then beyond that, I was the kind of guy that was set it and forget it. That was how I wanted my trading to be. Take me out at stop loss or take me out at take profit, nothing in between. But then over time, and there's time is a teacher, of course, experience, but also studying other successful traders. And Peter Brandt talks about popcorn trades. I give Peter a lot of credit. He gives a lot of great value in just Twitter, and it's just his stuff. It's super valuable. Do you remember the popcorn trade thing?
I think I do remember where if you up 70% of your position, you must take some off. He was talking about that on Twitter.
Right.
Exactly.
Talk
about that a lot.
Because if you're up, let's say you're in the trade, you're risking 10 and you're up 18 and you're going for 20. Why would you not be taking some profit off when you're almost 2 pips away or 2 points away from take profit versus letting it turn into a popcorn trade where it popped up, almost hit the take profit and then comes all the way down? So between that and then Tom Basso, me and Tom had some videos together on the channel and I've read his books and stuff, just seeing how he is a trend trader, like I like to be, like you like to be. And in those trends, sometimes you just need to be locking your stop and letting the trade move. For example, look at the trades I've taken this week. I had the S&P 500 short for 2 days, right? And then I had the Euro USD short from yesterday into today, where I'm just moving the stop loss and holding a piece of the trade and taking, sometimes if I'm not in the challenge, I was running out of time. I only had 8 days left. So I had to leave a good chunk on with this trade, but normally I'm piecing myself out. Like next week, when I start the next phase, 1R taking profit normally, 2R take some profit, lock the stop, 3R take more. So I think it's the finding yourself through trial and error, and then being open-minded to say, well, I like it better if I do the set and forget it. I'd rather go, and it works better based on the math if I set it and forget it. Or no, it doesn't work better. I don't like giving back wins. I like to win a lot. That's going to make my mental better, and I'm going to trade better then. And I think that's why you and me have always attracted to each other and work together, because we both like to win a lot. We both hate losing, which means we're going to trade very similarly, where we're going to risk down very quickly, mitigate the risk very quickly, and take profit. But what have you been doing now to challenge yourself to hold some of these trades longer? Now, like this week, you got out of one quickly, but I think a couple of weeks ago on, I think it was Euro JPY, you crushed it like full to ADR. You still had a piece in. So how are you trying to work that into your trading?
Sure. So I am obviously being part of the, me and you working together in the Black Shirt Club has really, really helped me. Tom in the Black Shirt Club, all the guys, they're always pushing me to be better, Laura. So I think that's one thing. Like I'm always getting pushed by people in my circle, in my close trading circle, to be better, because if I just come here and sit here and just by myself and have no accountability to anybody, I'm not really going to be improving as fast. Sure, I could improve, but not as fast as working with like-minded individuals.
Sure.
So what I've been doing is just trying. So I'm really, really used to take like 60 to 70% off at 1R, because I used to win a lot. I was like, let me take the bag and then lock the stop. But now what I've been trying to do is I have been trying to do, obviously we don't get it perfect every single day, as I was out very quickly in one of my trades yesterday. But I have been trying to take about 30 to 40% off at 1R and then lock the stop. What I found with my back testing of my system the D1 system, is that I do best also for my SAC, because I don't also like to see trades go, like I don't mind a trade going 5R from my entry and I got out at 2R. Like I don't mind that, right? But I don't like a trade going like 1.3R and I don't take profits, and then it knocks, and then I have to close it for minus 0.5R. That is what gets me, and that I know that for myself. So I was like, let me do something at 1R, and then I'm trying to let for me in my system and the D1 system, for me, I've just found better to either it's going to hit my 2R targets and then I can continue to partial out, or it's going to hit me at break even. That's just what I found that's been best for me. But that psychological factor of I don't mind seeing, like I don't really have FOMO if a trade goes. If I get out to 2.5R and the trade goes 8R, I don't really mind. Like I made my money, I'm won a trade. But if it goes like 1.2R and my things are like, it must go 1.5R, and then it pulls back and I need to pull it for loss. I'm like, what? I was up over 1R and now I've lost. It doesn't make sense for me.
I agree 100%. And I think that's, again, why we trade similarly and why we normally are working together so closely. But I want to also touch, like, because you bring up a good point that's kind of parallel to something I heard yesterday. And we've talked about this before, the disposition effect, which is that we're very quick to cut losing trades and winning trades. We get out of winners quickly. But sometimes we hold losers too long. But you don't really hold losers too long. You're willing to get out of them quickly. And I think the reason for your perceived the reason you have your perception of I would want to win more, even if it's smaller, rather than win bigger less often, that's because as humans in our DNA, this video it was about, I watch a lot of economics videos and stuff, and it talks about how if you're giving people 100% chance of winning $5 if you flip a coin, or whatever, if you play this game, 100% chance I'm going to give you $5 if you say yes to this, or an 80% chance that you win $6, people will take the guaranteed $5 every time. Majority of people will take the guarantee, not because that $6 is very close to $5. So in that situation, whether like how you're saying, I was up 1.5R going for 2R, I'd rather, take that win and not let that become a loser, is very parallel to that versus staying in the trade and letting it become a loss for that extra little 6 in the example instead of taking it at 5. Does that make sense? Are you following?
Yeah, for like that extra R in that,
yes.
Maybe that.
So you would rather take the win and have 5R rather than stay in, potentially lose some and get 6R also potentially, right? Yep. So I think we would rather take that sure win. So that's part of why you and I trade that way. That's in our DNA. But where it also, the video was talking about this, is that if there's the chance for the guaranteed 5 or a 1 in 10 chance that we get 1,000, we would play the 1,000. We wouldn't just go for the 5 because it's seen as so small and so irrespective. We'd go for the bigger one. Yes. So then you can get distracted by the potential big profit, and then you give up that sure gain, where you should still play the sure gain in trading for sure. You know what I'm saying? So I think it's like being aware of our like DNA wants us to make those decisions. That's just what we've learned through surviving over evolution. You know, I think that that's important to be aware of, because very quickly will we often get out of winning trades. Very often we will hold losing trades longer than we need to. But I think we could talk about my EuroCAD trade earlier this week. It was on Tuesday. As soon as it started to turn against me, I'm like, nah, see ya. Didn't like this anyway. It was already sized down. Get out of this. So what would you speak to the people who struggle to get out of losing trades quickly? How do you manage to do that consistently? How do you not get caught up in the loss and start moving your stop loss? Because how many people would do that, bro? Everybody would move their stop. Just if it turns around, if it just turns around, you know?
Yeah. And that was me in my beginning of my trading career. I think everyone's done it. Oh, you know, let me just move the stop a little bit. It's got to come back. It's got to come back.
Right.
I think what really hit home for me and I also want to ask you some questions as well, because there's some great points that you're speaking about there as well. So, but the first one, when the question that you're asking me is that the one that hit home for me when I first joined you. So I'd been trading for a year and a half before I joined ASFX in the beginning of 2020. And I remember this is when I started to see, you know, Steve Burns, all the guys that that were legit traders, not these like phony traders on Instagram, but these like legit guys that have traded for hedge funds as a career, managed millions of dollars. He said big losses, the fastest way to the number one thing that stops traders from being profitable is big losses. So if you avoid big losses, you have a greater chance of like a bigger chance of being profitable. So I would say the first thing to being able to get out of your losses quickly, and I think that I've really come a long way from my trading in the beginning of my trading career of getting out of losses, because I as I said, nobody likes losing. I'm nothing special about me. I also hate losing. Nobody likes losing. So I think the number one thing is to keep your size appropriate, because if your size is appropriate, if you're risking maybe 1% and you can see the trade's not working out for you and you're down like 0.6R, you're losing 0.6%. It's easier to get out if you're risking 5% and now you're down 3%, right? So it's just that keeping the size appropriate allows you to be able to take your losses easier, because you know the next good trade's just around the corner and you could win 4 in a row. And that was just one loss out of the 5 trades.
Great point. And then I would just add, the only way you'll know that 4 winning trades are potentially around the corner is if you have confidence in your system. So keeping the position size small is a tactic, 100%. Everyone should be doing that already. And if you're not, if you're trading heavy and you're nervous as you're trading, that's a sign the position is too big. So if you can cut the risk back and increase the confidence in the trading system, then you'll be confident to say, yeah, I'm out of this trade because it's not working. This looks like a loser. So my tip to everybody is always do more chart markups following the questions that go into your trading system. If you're trading with ASFX, backtest the A1, the D1, or the D2. So you start to see the patterns and you'll start to say, this is not what a winning D2 or D1 should be doing. This is coming higher and I'm short. This is not what a good one looks like. I've seen this so many times. So you get the proper sizing to keep you safe, to keep you profitable, to keep your risk appropriate. And then you get the back testing for your confidence to say, yeah, I'm out of this and I'm looking for the next one. I'm not going to get discouraged, slam my laptop and go on with the day, you know, because that's another thing people would do, is that they would just give up if they take a loss. But I think that's, again, you're maybe trading too big, maybe trading too much. Maybe it's not your first loss of the day, but if you have confidence in the system, you shouldn't be getting frustrated and giving up, you know?
Yep. It's just a mathematical equation. It's just part of the sequence.
Yes.
It's part of the sequence.
100%.
So I wanted to ask you, when you first started building the A1 system, right?
Yeah.
I remember in lots of, when I first did the beginner course, you always used to say, go for 15 pips, go for 15 pips.
Mm-hmm.
What changed from you saying go for 15 pips to being like, no, let's take partials, lock the stop and see if it runs? What was that changing moment for you there?
That's a good question, bro. I don't know what the moment was, but I think just more experience in markets. And then, like I said already, kind of learning from other traders that were riding trends for months. I'm like, why do I have to get out of these trades at the end of 15, 20 pips if it's still falling or rising and I could stay in this longer, even with a small piece? If it continues, I can still make more money. And then that carries a bias, which I can then come in and trade it to get, like I was short Euro USD yesterday. So I shorted it again today. Like the bias was still there. The technical setup made sense. Like it was a very easy trade to take on the follow through after you already have a winning trade running. So it just kind of was like, of course, not every trade 15 pips makes sense too. Like GJ doesn't make sense like Euro USD does. It's a different distance on what they move. So the 15 pip thing was more like a mindset of like, I don't need all of the move every day. I don't need all 50, 150 pips that it moves. I need 15 good ones that I can find 7 pips to risk to go make 15. And then I get my nut. That was the mindset of like, I have a predetermined risk. I'm not going for the whole move. I'm getting my middle rack of the ribs. I used to call it, right? Like not the whole rack of ribs, the middle. I want that chunk and then I'm out and I'm coming back and I'll do it again the next day. So I think that was where it turned and I started to see more clearly that there was potential to hold the trades. And I feel like now that I've been doing it, because it's not an easy thing to do when you're a short-term person like me off the jump, it's taken me like a year or two to really get good at holding some of these trades. But now it's my actions are, I'm leading by action for people like you that are still short-term based, but now starting to branch out into the longer term holds and stuff like that. Because why not, right? Do you have any reason that would say why not?
Yeah, no, there's no reason.
Yeah.
So I just wanted to ask you as well. So I remember, I think for me, what put me in the mindset of the snag and bag, right, was I remember I was watching, used to do the daily recaps on Facebook within the ASFX community on Facebook, right? Remember that 2020, I think you started it. Yep. So I remember the one I actually still saved the link to the video. I've actually watched it about 20 times. So you always used to say that you guys have no idea what it feels like to make 1% on 100 grand, 1% on 200 grand, 1% on 500 grand. I mean, your original position could be 25 standards and then you're holding 5 standards. And that's why you're always taking pieces. You're not trying to get like the whole move. So that's what put me in the mindset of like, shit, 25 standards. If I can close out 20 standards and then on a 20 pip move and then hold the 5 standards for the rest. It's beautiful.
I had 100 standards short SP 500 since Tuesday. And then as I was holding,
you said so.
Yeah. And then as I pieced out of the 100 standards, I took off 25, took off another 25, got myself down to 15 standards. And that was what I got stopped out on profit last night, was 15 standards. Beautiful. So same thing. It's just, and that, I think that mindset that I had in 2020 was the same mindset I had in 2018, which is why I'm still here now, because then it's like, if you can do it with $100, $1,000 with appropriate risk, of course, you're not going to make a lot of money with $1,000 account. Like 10% would be $100. So if you're trying to make $100 in a day, you're trying to make 10% in a day. That's not realistic unless you're over leveraging or putting the whole account at risk or a good chunk of it. So it's not realistic based on proper risk management for professional trading is what I should say. So I think like, then you start to say, well, bro, there's a lot of money out there in the world. So I better get good at managing this small money. If I can do this right, and I can prove to people, just like with these funding companies, you prove you can do it right, they're going to give you more capital, so there's way more money out there. That was what I always knew too.
And 100%, that's those prop firms, funding companies cancel out the need to trade with $1,000 account. Use $1,000, go buy a 200 grand account when you have the skill.
Crazy. What a time to be alive, bro.
It's beautiful. It's absolutely, it wasn't like this.
Dude, and like I said, I could have been that guy on you've been funded longer than me. I could have been the guy still on the fence about it. But like, it's so ignorant to be on you have to just be able to see when tides
are getting paid out like 30 grand a month from these prop firms. Bro. Yeah. So I also want to, I like what you said there in the wording you used. You said, that's why I'm still around today. And that's actually what you said in that video that I was talking about now. You also said, that's why I'm still around here today, because I take my profit. It's like, you don't go for the home run and trying to hit it out the ballpark. You just take your singles. And eventually one day those singles could be $5,000 per trade, $10,000 per trade. You know what I'm saying? So I liked that wording that you used there as well.
And I think too, when when you talk about risk management, the one other point that I would say we need to discuss is the size of the trades. If you're sitting there and you're trying to put the same percentage risk on every trade,
Yep.
your system has to be so mathematically perfect, which most are not, that you won't be able to make money long-term consistently. Whereas if you're grading the trades and you're saying, based on what I back tested, this is a higher probability setup than this, and this should get more size than because of the probabilities that we've tested, that position, that's when you hear people talk about, I was down 10% that month and I had one, like stock traders, and I had one good trade, because they know that they had that one A setup that presented and they hit it harder. So it made up for those maybe lower probability losses. And then what we've done over time now is kind of remove taking lower. When was the last time we really talked about C setups? I feel like we haven't really talked about it. We're looking at DA2, we're looking at the D1, we're looking at high probability setups now. And I think that's why a lot of people in our group are getting funded and why a lot of people are making money, because you're shifting the probabilities by testing and using proper, parameters, good questions. And then you're saying, okay, now that I know when probabilities are in my favor more than sometimes when they're not, now I know in that more moment, slam it, get in there, put the risk on. And then in the less moment, cut it back. And that's how you can grow and really compound, I think, because you're taking advantage of the highest probability setups to their fullest. But that doesn't mean go full port on it, right? Like you should have, like for what's your A setup risk? 1%?
1%, depending on obviously if I'm trading my funded accounts or my personal account. My personal, obviously, I could maybe go a bit more to maybe 1.5.
Sure,
but
sure. And then what's your C setup? 0.5%, 1/4%?
Yeah, 0.5% to 0.3.
Yeah, smaller. So like, again, you could take 2 losses on that C setup, 3 losses on that C setup, and then hit 1 A trade for 1.5 R and make it back. You know what I'm saying?
So I think, and be up pretty good as well.
And be up. So that's why I think grading the trades and then having different position sizes for each grade, A setups get more. That's a great way to approach it. And for everybody listening, don't go doing, in my opinion, please, you don't need A-, B+, B-. Just ABC.
Keep it simple.
Keep it simple.
Keep it simple. So I also wanted to say that's also a good point. So Laura in our Black Shirt Club that we work with,
shout out to Laura, bro.
Yeah, she just passed phase 1 of the MFF.
She beat me. She passed it earlier this week. She bested me.
In like 3 or 4, 5 trading days, something like 3 days. Yeah. But I wanted to say, like, she doesn't risk a lot per trade. Her maximum risk per trade is 1%, but I'd say she risks on average about 0.5%.
Yep.
But the thing is, her risk to reward ratio is on. Remember, she showed us her stats the other day. It was 4.5 or something like that.
Yeah, bro, crazy. She hits those trades really well.
Yeah. So, and trading the D1. And now she's getting to the A2. So really, really good. Shows you that you don't need to make 10% in a month, or 8% in the month to pass these funding challenges, or even do it on your personal trading account. You don't need to be hitting 5% position sizes.
No, definitely not. Definitely not. And I think when we talk about this position sizing and like controlling the risk, you got to also just think about like where do you feel it necessary, or where, if you were in a professional setting, would you ever want to risk 5% of capital on something if you're trying to preserve and grow it long term? Unless it's a sure bet, which nothing is, it doesn't make sense to be risking that much. But I think like the funding companies, the prop firms, like we've talked about before, they play into human emotion. They let you know that you can buy as many challenges that you want, bro. So buy the 200K, spend $1,000, and then blow it that day. Just buy another one. So they can almost reinforce negative habits, but again, bro, there's winners and losers in everything in life. Not everybody is Odell Beckham Jr., right? Not everybody is Robert Downey Jr. Now I'm thinking of the juniors. No, just famous people. You know what I'm saying? Like there's winners and losers, bro. Some guy that played with Odell in high school is now a garbage man or a teacher. You know what I'm saying, bro? Like it's just the way it is.
I've got a good thing for that. So Elon Musk, he's support Twitter now. We get on. So he's actually from South Africa. He's from Pretoria. It's like, so there was a meme going around in South Africa. Obviously you guys wouldn't have got it, but it was like, what must the guy that went to Pretoria, he went to Pretoria Boys High. So they're like, what must the guys that went to Pretoria Boys High with Elon think, who's now the manager of a pizza shop in
That's
Pretoria?
What I'm saying, bro. That's what I'm saying. There's winners and losers, bro. It's just life. You can say there's not. You're probably a loser if you say that there's not. You know what I'm saying? You just don't realize it yet. So when you realize that there's winners and losers in everything, you start to look at the winners and align yourself with what they're doing. That's why you and me are sitting here, bro. We do as much as we can to be like winners, And I think that the risk management, it comes with experience. to Tyler's question that started the episode, it comes with practice, finding, do you like to snag and bag? Do you like to try to hold it? But then once you find something where you start to get in the groove of it more, trusting the system to say, look, I'm at 1.5 R, lock the stop, leave it be. This is an A setup. I'm at 2 R. Now I lock the stop. I don't lock the stop on a higher probability setup as fast because I want to be in that trade longer. Potentially it's a good setup. So it's just finding good rules automates the whole thing for everybody that, listened all the way through to the episode today. And back to just tie to Tyler's question, it's finding good rules. And like James said, being okay with not getting all of every move. He's okay to get stopped out in profit after he only took profit at 1.5 or 2 R. He's still winning. So it's about having good rules and then detaching from the what could have been. There's money everywhere right now, everywhere. All these things are moving. You have to let go of all of that, and really lock in. But this is good, bro. I'm glad that we got this episode in. Shout out to Tyler for helping us make this episode happen.
Yeah, appreciate that.
For everybody who watched all the way through, we didn't really do any plugs for this, but make sure you guys check us out on ASFX TV. You can watch James trading the London Open now, Mondays and Wednesdays. I'm trading the New York Open Monday, Wednesday, Friday. It's 3-day free trial with ASFX TV. I'll put a link in the description. After that, it's only $30 a month right now. Price will be going up eventually, so get in while you can. It's going to pay for itself between following my trades on Euro USD and US 500 and Bitcoin to then James is setting you guys up with some GBP and Euro pairs in the London session. There's plenty of money being called out there. So make sure you guys hit the link asfx.tv, www.asfx.tv. But James, good episode, bro. I'm happy with this one. Shout out, like I said, Tyler for making it happen too.
I think that was quite good. I appreciate it.
Absolutely, bro. All right, everybody. Make sure you subscribe, drop a comment, hit the thumbs up, and we'll see you in the next episode.